Welcome to TMS Capital Insights. It's Jeremy Hook and Ben Clark bringing you some news from the current period, the reporting season for August 2013. And Ben, it's been a busy time already and plenty more to come.
Yep.
You've been keeping an eye on a few of them?
Yep. So we had Cochlear was probably one of the big ones that clients own that reported its result late last week. I'd have to say the result, looking backwards, was fairly poor, mainly driven by the fact that they were still selling quite an old hearing device after the product recall that they had the year before that. The company has guided for very solid sales growth this year. They've of course released their new processor, although it is still yet to receive regulatory approval in some countries like the US, and that could have an impact on the financial year that's coming. The business will have to record good sales numbers, good revenue growth, to have that next leg up in the stock, and it is something I think we will have to monitor how that is performing. But overall, I guess it was pretty much as expected, and the year ahead is a really sort of crucial year for the business.
Okay.
And Telstra, that was a big one.
Telstra's
for clients.
widely held, obviously, and it's a favoured stock for us in our portfolios. And Telstra's result was good, and we saw earnings growth. That's something new to Telstra.
Definitely.
We've held it for dividend purposes predominantly. It's delivered growth while interest rates have been low. And right at the moment, we were pleased with this earnings number because it showed what was going on in both the mobiles division, which we did expect, but more important was what was going on in data, and that's always been a lot of upside for them. So they're going to pay 14 cents. That'll be X on Monday, the 19th of August. And people are looking at a 5.5% fully franked dividend yield. And 3 dividends being achieved in 13 months is somewhere like 11.7%, so still very generous on the dividends.
Very much so, and good to see finally the payout ratio has dropped below 100%. So that
due
dividend,
to earnings growth.
So you might see a higher dividend, I think, in the coming 12 months. That might start to inch up a bit.
Yeah, great. And you've been watching ResMed?
Yep, ResMed I think had probably the best result we've seen so far in the earnings season. Revenue, 74th consecutive quarter of revenue growth. It's a pretty phenomenal track record. Their cost control was very strong, which meant that margins actually grew to over 63%, which is very, very good. And the bottom line improved rapidly. The dividend, although I know a lot of clients have sort of said, I don't really like ResMed because the dividend's low. They raised the dividend 47% for the half. And it is low, and it is still low given the share price keeps running up. However, the dividend growth is superb, and we expect that'll continue.
It was their maiden dividend in the last financial year,
it was,
so it's good to see that coming on. And obviously, they've got big opportunities. It's massively undiagnosed.
It is. The recent studies suggest 1 in 4 people have sleep apnea. So we think it's a market that's just going to continue to grow, and I think for the moment, all players in the market will continue to experience good earnings growth. So look, it's had a good run, and it does look fairly pricey on the current sort of PE. However, I think, if you look a bit further out, you'll still get good sort of growth and a rising sort of yield out of this one.
Now, one of the things we were going to mention today was something that's a surprising change. Over the last year and even the last few years, there's been a real lack of new float activity, new listings and the like. And that's been an event in itself, but it's also had implications for a lot of stocks whose activity depends on new listings and the like. But something's changed there. We've seen 4 big companies create demergers where they separate one company into 2 components. Thinking of Fox, thinking of Amcor, UGL's announced plans, and so too has Brambles. So there's 4 big ones that are going to become 8 companies. On top of that, we've seen some large IPOs beginning in the form of Steadfast, iSelect, and Virtus for some.
And more in the pipeline.
And some more in the pipeline, Genworth Australia, which is in the mortgage finance business. And we've got Oz4X coming soon. So, and possibly more. Now, why this is interesting, not these companies necessarily themselves, but the companies that depend on the activity. And companies we're likely to talk more about in the coming months are ASX, Computershare, and Macquarie Group, which we're looking at very closely and can see some opportunities beginning.
Yeah, look, I think the other thing is, the secondary equity market, so the capital raising market, last year, the last 4 months of last financial year closed, full stop. No one could get a capital raising away. in the last 4 weeks, I reckon I've seen about 30 capital raisings,
Smaller
mainly
companies,
from small miners. However, it's a lot more paperwork going out to shareholders. It's a sign that sentiment's also picking up in that area of the market. So I tend to agree with you. I think ASX and Computershare are likely to report weaker results, reflecting
this year
the poor performance of the markets last financial year. But the outlook is rapidly swinging back, so it's definitely something to keep an eye on.
And speaking of outlook, what's coming up for the next part of the reporting season?
Commonwealth Bank's a big one on Wednesday,
Yes.
and we'll be closely watching that. A lot of analysts are looking for a special dividend, which would be nice to see. The bank, I wouldn't say, looks particularly cheap, but we are seeing a housing market that's resurging, which should mean some earnings growth in the year ahead for them. And Wesfarmers on Thursday.
Big stock for us.
Big stock for us. The Wes Ends, of course, has been one of our best trades, we think, in the last few years. And it'll be very interesting to see how they report. There's also some talk, excess capital on the balance sheet. What are they going to do with that? So we'll be watching it closely.